Hey guys, you've joined us live at Money Control. I'm Manisha Gupta, and the focus is on metals right now because there has been a consistent profit taking onto this space. Let's get in the facts and the expectations going on from here. For that, we are now joined by Peter McGuire of XM Australia. Peter, hi, thank you so much for joining us. And it's an underperformance that we've seen constantly come in from zinc, trading 8% now for 2024. I mean, it's not such a great move for aluminum as well, which is trading at a 1-month lows, near cost of production now, and copper prices continuing to be under pressure as well. What's your sense, first of all, on the macro, and then, of course, we'll talk about individual metals here?
Well, I think first off, Manisha, and good to see you. I think first off, you've got to take into consideration global demand and these finished products. I mean, Germany is going through a very, very tough time if you're looking at the quality of the economy and where it sits. So there's the first part. Secondly, weak global demand and the impact that has to finished products, and especially the likes of base metals and any metal that goes into anything that one buys, from power plants to buildings to construction. Everyone hasn't got the GDP of India, Manisha.
Peter, even as China has yet and again come out with RRR cuts and stimulus measures and liquidity injections, that hasn't really had an impact.
No, it hasn't. No, it's been very, very soft. And when we think about it, you know, they had 2 goes last year and they've just had a quick run around the table in the last couple of weeks. You know, when you think about it, Manisha, they've really got to do something extraordinary to pull a rabbit out of the hat to get internal demand across China. And the focus has certainly got to be on their own internal economy. One's only got to look at the CSI 300, and it's hemorrhaged over the last couple of years, back nearly 25% in a year.
Let's talk about aluminum then, and we do know it's trading at a 1-month lows, very close to cost of production, way lower from those all-time highs that we saw a couple of years back again. It clearly has been a one-way road, and that has been lower. If you look at the funds position, they are scaling on short positions onto this one. How would you look at aluminum from here on?
Well, you'd say, Manisha, if it was strong demand globally, I think you'd probably see an uptick. But at the moment, it seems to be languishing, and a lot of those metals are, and that's where you're not seeing any sunshine. You know, it's soft. You're looking as far as demand picture coming out of China, and there's nothing really, you know, startling. So the fact of the matter is that it's probably going to be a soft first and second quarter for base metals, and see if you see something come in the summer of the Northern Hemisphere.
So how far would you say is aluminum from its bottom? Do you still see some pain next couple of months? And I mean, as you said, the accumulation perhaps would only happen by summer.
Well, exactly, Manisha. I think it's possibly got the opportunity to probably have another bit of a leg down lower. And if you look at some of the other base metals and some of the other metals globally that have been hit so terribly hard, some are down 20, 30, 40 and 50%, and some nearly 60% in the last year. So they're all singing in the same hymn book. And I think that at the moment, aluminum and a lot of those other base metals are going to probably be very, very soft over the first and second quarter.
Peter, coming on the ferrous metals, and iron ore prices are trading at a 4-month lows. Rebar steel is trading at a 4-month lows, and that perhaps seems to be pulling the zinc down because the galvanization demand is kind of absent in much of Asia. How would you look at iron ore, steel, zinc, all of these metals?
Well, exactly, Manisha. I mean, you know, it's been probably, we had a great 23, and the tail end of 23 was very strong from a price perspective, and then they've certainly given up some of those gains. And we had Lunar New Year, so, you know, that was a little bit of a wipeout for the best part of, you know, a month. So maybe they're just giving up, they're evaporated, they're exhausted to the upside, and they're giving back some of those strong prices. And we've got to see internal demand again coming from the likes of China and India, naturally with strong GDP growth, and the overall demand picture as far as steel going into construction globally. You know, there's plenty of countries in the world that aren't doing what you guys are doing. And I was there a couple of weeks ago, and it's just astounding, the growth across India, Manisha.
And the Dr. Copper isn't feeling better itself.
No, it's sick. We need a look after Dr. Copper, because that barometer as far as growth economically globally, it's a wonderful metric, but unfortunately it's very, very soft. You've only got to look really at the German situation, and it's, you know, the whole Eurozone is very, very sick at the moment, Manisha, and so is the UK, and it's going to be a long time till we get, you know, traction in 24 for a lot of those base metals and the production naturally coming out of, you know, big plants.
So, Peter, if you are advocating buying metals in the second half, and that is when you see some support come in for many of these, I mean, I'm assuming you're taking the interest rate cut sometime in second half also into consideration there. But where do you see a better buying opportunity within the ferrous and the non-ferrous space?
Well, I've got to wait till that position, Manisha, because unfortunately I think it's a little bit at the moment like I catch a falling knife and you just let it fall, and we've got to see until we get some real structural changes with, naturally, as you mentioned, interest rate policy, growth going forward, and what the situation is naturally with these big consumption engines like Europe and South America and Africa. We've just got to see what goes on to really get some sort of mind's eye. And maybe it's going to be the third quarter, maybe it's going to be the fourth, but hopefully we do see some sort of rebound in 24.
23 wasn't such a great year, Peter, but would you say 24 would be slightly better than that?
Oh, I tell you what, we're 2 months in, Manisha, and it's too early to call. I think it's probably at the best part of it. It's going to be a very tricky, first 6 months to try and make a dollar out of the base metals if you're bullish.
Peter, there are a lot of analysts within India suggesting that even as China and other countries may not do so well, but Indian markets, given the fact that this is election year and there is a lot of support and investment expected in infrastructure and construction, etc., might see even a younger or a higher double-digit growth in sense of demand here. There are various reports until 2030 as well suggesting that. How would you look at India's standout?
Oh, Manisha, it's extraordinary. I mean, I was there the other week and we were listening to the railway minister up in New Delhi, and, you're building the size of the German rail network every year. So it's just mind-blowing. It really is. What it reminds me of, and I'm passionate towards it because it reminds me of 15 or 20 years ago when I was in China. India at the moment is in a sweet spot, and your sweet spot is a lot different to China's because you're going to have population growth to explode. And compared to what China's going to experience over the next 60 to 70 years, it truly is your century.
All right, so some positive cues coming in from India there. Peter, as always, thank you so much for joining us. So, well, some support in metals is what you could see, but that would only come in by the second half of this year. The first half, the next couple of months for sure, are expected to be slightly bearish. So some more decline, but perhaps those are accumulating levels is what you could see in metals.